Hey everybody, Marisa here from She Knows Crypto with this week's Crypto Cocktail Hour, a news roundup of the news in cryptocurrency. So this week, again, not super for cryptocurrency. We've seen the Bitcoin price is still down, Ethereum might fall under 500, and that's not great. And it might get worse. We really don't know what the values are going to be for cryptocurrency against the dollar. So this prompts me to kind of think about for myself and for you as well, how committed are you to cryptocurrency? What's the price where you get out? If it was down to 100 for Ethereum, if it was down to 1,000 for Bitcoin, are you really in it to make more fiat currency, more dollars, more euros, or are you committed to the future of money, a different way to actually exchange value? Because the concept of cryptocurrency itself is not going away, no matter what the roller coaster of volatility is. So that's something to definitely think about for you personally as we go through this period of more extreme volatility in the cryptocurrency markets and in the top 20 coins. So right to the headlines. The first one is the Ethereum bloodbath. And that's what the first headline is titled, actually, bloodbath. And it doesn't look great for Ethereum. Why is this happening? In general, the cryptocurrency markets are very responsive to hype, bad news especially, any kind of news coming from a financial market leader, a big entrepreneur, a government. So the two things that happened in governments is with Japan and Korea, which are two very large cryptocurrency markets. So Japan's a little upset because Binance is operating there without a license. So they're trying to crack down on exchanges that are operating without licenses. So that's kind of a boo to the crypto market. And Korea as well is trying to crack down on anti-money laundering using cryptocurrency, and that will always be a thing. That's a thing with cash, even. Governments are cracking down on cash, so they'll be cracking down on cryptocurrency, and with an excuse, actually, that it's money laundering. But in the same breath, with Japan cracking down on licensing, they are allowing Japan exchange, Yahoo exchange for Japan to buy another company and create a Japanese exchange. So a lot of noise from governments. Also, there's Jack Dorsey, the CEO of Twitter, and financial entrepreneur from DeVerve, Nigel Green, arguing with each other about what the big cryptocurrency is going to be. Is it going to be Bitcoin, or is Ethereum going to be the currency of the future? So Jack Dorsey thinks Bitcoin will be the only currency that we have, the world currency. And Nigel Green is arguing that Ethereum has a lot more potential. And what he's saying that's a little strange is that Ethereum is moving away from being looked at as just a cryptocurrency to being looked at as a blockchain platform. Well, Ethereum was created as a blockchain platform for decentralized apps, and Ether was the gas to fuel that platform. That's why it was originally created that way. It's only that we've looked at it as just a cryptocurrency, but it's so much more than that, and it always has been. So that's a little bit of a strange thing to say. But again, in the cryptocurrency market, we're looking for guidance. We're looking for, where should I invest? What's the future? And it's anybody's guess. It could be Ethereum. It could be another cryptocurrency that has yet to be created. We don't know, but we're looking to our governments, we're looking to our financial leaders to try to tell us. But instead, it's really going to be something that we decide. And I keep saying this over and over, that we as a society and participants in this financial market, this new financial market, that get to decide which is going to be the thing. So be careful with these sound bites that you hear from whoever, trying to look for some authority to say it's okay to invest in cryptocurrency or which cryptocurrency to invest in. So a little patience there. The next headline, which I always harp on, is about security, and it's 71% of cryptocurrency exchange users would fail a password audit. What does that mean? That means you have a shitty password. It's like your dog's name plus their birthday or something like that, or use the same password over and over, the same one for your Gmail as you do for everything else that's important to you. Don't do that. That's not a thing. Get a password manager, get a VPN on your router or on your PC or your phone or all of the above. Enhance your own personal security. If you lose your cryptocurrency on an exchange, which you shouldn't be keeping a lot of cryptocurrency on an exchange anyway, you should have your own wallet, then that's really your fault, and I don't feel bad for you. So check your passwords that you're using for exchanges and everything else, and for God's sakes, if you don't have a password manager, please get one. LastPass, 1Password, they're free. So there's really no excuse. It just takes a little bit of time to secure your money, which is really, really important, and the rest of all of your information. The last one I want to talk about is the Blockstack conference. Edward Snowden appeared via satellite at the Blockstack conference in Berlin earlier this month talking about Bitcoin. And he stated that Bitcoin's primary flaw is not with scalability. So the scalability issue is how long it takes to make a transaction, which is about 10 minutes. And can all 7 billion people use Bitcoin? No. So it's not scalable. And what he is suggesting that's not the real issue, it's the public ledger part. So the cool part about the blockchain that everybody can see it, he thinks that's not so cool. And why is that? It's because of privacy. And that privacy enhanced with the scalability of having a historical record of everyone's transactions forever and ever and ever is going to hurt privacy and scalability. And I think it's a really important point. He's a bigger fan of Zcash, which has a very unique approach to privacy. So he's an advocate of Zcash. If you're not sure what that is, definitely look into it. But privacy has been a very big topic this week, considering what happened with Facebook and Cambridge Analytica, which is a political consultancy that used the personal data that Facebook has on all of its users to manipulate elections. So definitely that was a big story this week, and I think it's a really important story that's not directly related to cryptocurrency, but it has people thinking about privacy again. Now, why should we think about privacy? When I talk to my friends about privacy, I usually get the same kind of answer. Well, privacy, I don't really care that much about privacy because I don't have anything to hide. And I'm not doing anything wrong, so I don't need to have privacy. And it's not about being up to something. It's about that personal data. When you really look at what Facebook has on you, they have personal data, what you like, what you don't like. They say that Facebook knows you better than your mom does, or if you've been a user for 10 years, like a lot of people, better than you probably know yourself. So it's being able to use that personal data about you, the thing that's, it's not criminal or anything, but it's very personal data to be able to manipulate you. And that's what privacy really means, to hold that personal data, that personal information that's emotional and important to you, and to keep that to yourself and not have that accessible to Cambridge Analytica or any other thing. So this privacy thing is going to keep coming up, and it's a very important part of cryptocurrency and the blockchain in general. And if you haven't really thought about what privacy means to you, that's important. It's not just about securing passwords, but it's about securing your personal information so that in the future, that personal information can't be quote unquote used against you in a very manipulative way. So definitely think about that. Those few headlines for this week. Again, nothing huge happened. The markets are volatile and stable. Think about that. Think about why you're investing in cryptocurrency, if you're just in it for profit or if you want to participate in this movement of a different type of value exchange and monetary system that we have. So headlines for the week, on to the shitcoin of the week. The shitcoin this week is called Flying Money. And when I first looked at it, it looked like Flying Monkey, so it made me very curious. But it's actually called Flying Money. And this is an asset, a token, that is attempting to tokenize asset classes. So other currencies, real estate, the stock market, all of those things. And their premise is that there is no trust or security in cryptocurrency. So they're going to tokenize everything to create trust and security. And that is exactly the essence of cryptocurrency and blockchain technology, is so that we don't need to have trust and we don't need to worry about security because that's innate in the technology. So what they're doing essentially is taking assets and other types of currency and putting another type of currency on it to represent something else that represents value. That to me is kind of a shitcoin. And they're claiming to take out the intermediary when they're making a token represent something as an intermediary. So it really doesn't make any sense at all. It's essentially creating another type of stock market to represent value that represents value in something else, which is just convoluted and confusing. So to me, that's the shitcoin for this week. Take a look at it. All the links will be in the email. If you're not on the email list, please subscribe at sheenascrypto.com so you can get all of the links and be part of the community. That would be really great. Be part of the discussion. And for this week, the cocktail hour will close with the same cocktail as last week. We're still in Medellin, Ron Medellin, very delicious. The 3 year is very good. Cheers to y'all, and we'll see you next week.